of income tax. This is Block Pro for Tax Academy for Level 1, Part 2. We're going to be doing a demo, at least one exercise, exercise 1-3 from the textbook, as well as reviewing the first 2 case studies. In our next class, we'll be doing the remainder of the case studies, and then in our final class, we will just be doing some course review. All right, but tonight we are going to be doing Part 2 of our demonstration of Block Pro. All right, those of you at home should have already done case studies 1-1 and 1-2. If you haven't, just pause the recording and finish those up, and then just pick back up afterwards. We will wait for you, of course. All right, finish exercise 1-2 today. If time allows, Valerie, I think some of it might be covered in the case study. If there's specific things you wanted me to demonstrate, of course, we could do that. So I certainly don't mind that. I'm just going to keep an eye on our timing and cover the new material. I'll prioritize the exercise 1-3 and then the 2 case studies. And then in our remaining time, I can show you a few more things for exercise 1-2 and the optional 1-4. The T3. Yeah, nope, absolutely, we can have a look at that. All right. Okay, so for, as always, we just had a bit of an issue here in class because WebEx muted me. So if there's any issues with the sound, just let me know, guys. And if you get booted out of the class or have a connectivity issue, come back in and you're having trouble, follow the checklist here. And particularly remember that bad habit WebEx has of sometimes spawning a second window underneath the first one. Okay, but welcome back, everyone. And especially remember for those people who are listening to the recording online, it's very helpful if you guys here in the class ask questions, because the people listening to this who've downloaded it, they don't have the chance to ask questions. So if there's anything that's unclear, please do let me know. We will be respecting class times though, so I will be finishing up at 9, or more and more significantly, if you need to go at 9, feel free to go at 9. I may hang around and demonstrate a few things afterwards, but we will be trying to keep it 2 to 3 hours, bearing in mind that there is more to demonstrate, more in the software than we can reasonably get through in 3 hours, and there is more information, more detail in the textbook than we can cover. There's simply too much there for us to cover every single little thing in the textbook in the time we have. We're going to be mainly focusing on hitting the major points. So tonight we are going to go through exercise 1-3, and then we will look at the 2 case studies. And if we have time at the end of class, I can go back and show you some things from exercise 1-2 that we didn't get time to look at last time, and or have a look at exercise 1-4, which is optional. All right, let's have a look at exercise 1-3. So for anyone who has downloaded this online or somehow missed last class, remember all of these exercises and case studies are taken from the textbook, which is a separate textbook for the software, Block Pro for Tax Academy Level 1. Do not select the one for Quebec, my mistake. It superficially looks similar, but if you pull it up, the exercises will be subtly different, and you will not get, you'll get lost if you try to follow along. Remember, in your library, you can just search for Block Pro for Tax Academy, and you want Level 1, not the slightly darker green Level 1 Quebec. Although they're right next to each other, it's very easy to click the wrong one by mistake. And as the differences are subtle, you may not notice them right away. Okay, so tonight we're going to begin by looking at exercise 1-3. So let's give this a read over before I dive into it. So this is for taxpayer Dave Duncan, who is separated, lives on 3rd Street in your city. He's got an email address, and Dave has a disability. He suffered an injury in 2023, and he's permanently confined to a wheelchair, but he has a certified disability certificate on file with the CRA. He hasn't worked since the accident. He has received workers' compensation and employment insurance while living in Manitoba, but moved to British Columbia on April 4th, 2024, where he started his new job at ANA Packers. All right. So to be clear, Dave had not worked since the accident, but then moved to BC and now is working at ANA Packers, and his province of residence is British Columbia now. All right, so we've got information from his T4, which is all in the new location. We've also got a T4E slip for the beginning of the year, and a little bit of workers' compensation, T507, and some wage loss replacement plan benefits from Your Life Insurance. And then we've got various moving expenses down here. Okay, so this example, there's quite a lot in it, even though it's a single taxpayer. Let's dive into it. Right. And remember, for those of you joining us who haven't sat in on one of my classes before, my name's Brian Clark, by the way. I tend to run the BlockPro software in a separate browser in order to avoid problems with my cache. If you have trouble opening BlockPro and you can't figure out what might be causing it, it can sometimes be because of something in your history or your browser cache. So try clearing your browser cache, try clearing your browser history, and if that's not practical, you can try running BlockPro in a second browser. So I use Firefox for that. All right, so let's have a look. And of course, because I am an instructor, I need to select the student view rather than the instructor or writer view. You, of course, should all see the student view. All right, so let's start on Dave Duncan. And again, if I just hit practice, it'll just open a blank return. But just to keep it clear, we'll start with Dave Duncan here. All right, as reviewed. And Karina has a question. Do you have to do separate tax returns for spouses or common law partners? Yes, but in this software, the tax returns are joined. It's only for dependents where you would need to start an entirely new return. The term for this with a spouse or common law return in this software is a coupled return. So you would begin with one taxpayer and then say that they have a spouse or common law partner, then say you want to do a coupled return, and then the software will automatically begin populating the return for the spouse as well. It is possible to do completely separate returns for spouses, of course, but in that case, all of the sharing of credits and things has to be done manually. So it's better and easier to do a coupled return if the option is available. In practice, in the field, if you're doing taxes for somebody, one partner or spouse might come in and get their taxes done with you, and the other spouse or partner might not do their tax at this time, or might do it at home, or might do it with another provider. So as a practical matter, any decent software package will be able to accommodate both cases. All right. For us, however, we are going to be assuming that if the spouse is doing their taxes, they will be doing it here with us, so we can show you how it works for both cases. In this case, however, Dave is separated, and this is not new in the year. So we'll put in the first name and the last name. And remember, from last time, as one name, like Cher or Madonna, then it is entered in the last name field. All right, Dave's social insurance number, 870-001-146, and Dave's date of birth is February 1st, 1990. All right, so Dave in 2024 would be 34, which is not an age where anything unusual is going on. And for these questions here, of course, the answer is going to be no, he did not change his surname, there's no legal representative, and this isn't a return for a deceased person. Okay, Mohammed has a question. Is it the same with dependents as well? Mohammed, for dependents, if they are in this software, and different software packages may handle this slightly differently. For a dependent in this software, if the dependent is doing their own return, that has to be created separately, like we did last time with Emily Chase. In addition, the dependent is added on a dependent on the core return. So last time, Reed and Bonita Chase added Emily as a dependent, and that way medical expenses and tuition for Emily could be transferred to Emily's parents. But every software package may handle this slightly differently. Some of them will allow you to do the dependent's return kind of out of the same file entry as the parents. Some may require them to be entirely separate, as is the case here. But remember, they only need that separate entry if they are doing a tax return. So in the last exercise we looked at, Emily is doing her own tax return, so she has to have a tax return created, but Luke does not, because Luke is a minor and has no income, and there's no need to file a tax return. Okay. For other adult dependents, such as seniors or grandparents or things like that, they, of course, would need to file their own return and have that created separately. Okay, for the mailing address for Dave Duncan, it's 367 3rd Street. So remember, the street number goes in here, and the street name is 3rd Street. And the city will be your city, and province is our province, and postal code would be an appropriate one for British Columbia, and Dave's mailing address does not change. Dave did not reside outside of Canada at any point in the year. Province of residence is British Columbia. Home address is the same as the mailing address. Moved to a different province or territory in 2024. Enter the date they moved. All right, so here is something we will want to enter here to indicate when Dave's move was. So the date of the move will be April 4th, 2024. Right? And Dave was not a diplomat, was not in prison, did not sell a principal residence. Nothing in the problem to indicate that he sold a principal residence. And did not flip a property, but mandatory question, does not have any specified foreign property, is a Canadian citizen, says yes to the Elections Canada question, but no to the BC transplant question. Yeah. He moved in the year, so would his mailing address not change? Now that's a good question. Let's look closely up here. Well, the home address here, for the mailing address here, right, this is his current mailing address for CRA purposes, right? So his current mailing address, 367 3rd Street, that is his mailing address. So that's what this is referring to here with the mailing address. If the mailing address was different, if he was on vacation or something, then that's the purpose of that question. Notice if we put no here, then we would need to say where he currently is and so on and so forth. All right. All right, so Dave is in British Columbia, home address same as mailing address, and not a diplomat or any of that. Okay. And now we will put in his contact information, which we have here, 555-502-4411. All right. And for anyone who wasn't with us last time, this blue box here referring to CIS, that's just for H&R Block's internal scheduling software. You can ignore it for these exercises. This is only something That's important within the H&R Block offices. Okay, Dave's marital status is separated, but this is not a new status. It did not change in the year. And there are no dependents. All right. There we go. And remember, the calculate and continue at the bottom of the page will push you forward to the next page. The calculate and save at the top will save the entire return, but not move you off the current page. It's important to save from time to time and be aware that if you have a second tab open pointing at another return, that tab might time out and prevent you saving. So it is good to, it's best practice to keep the minimum number of returns open at any given time. All right, so in 2024, did Dave complete at least 200 hours of service as either a volunteer firefighter or search and rescue volunteer? The answer here is no. Does Dave have a disability? And the answer here is yes. Now, does he depend on someone else for support? So there's no supporting person in this scenario, so we can answer no. Has the CRA approved a disability tax credit certificate for Dave? The answer is yes. And does Dave want to claim the disability amount? Yes, because he's going to be claiming it for himself. All right. So notice the second page here, these are for questions which can affect the return overall. All right. Does Dave have teaching supply expenses? No. Did not buy a house. There's no income and pension benefits, no additional deductions, exempt foreign income, etc. No labor-sponsored funds tax credits. No other employment expenses or unusual expenses. But if Dave received payments from a wage loss replacement plan in 2024, we would need to enter all the contributions they made to the plan in 2024 and previous years. So let's have a close look here. So we have his own contributions to the plan listed as $500. Okay, so the software in this case should automatically detect the type of wage loss replacement plan benefits in the return and handle them appropriately. There's nothing in terms of a qualified digital news subscription and no other deductions. The big ones are going to be for the moving expenses and nothing beyond that. All right, and again, let me just double check there. Here. Right, so the big one is going to be the moving expenses down here. Okay, but there's nothing at the bottom of the page, at the bottom of the problem, which we're going to be wanting to deal with there. All right, so we will calculate and continue. All right, the return is not being done by volunteers. Dave wants to use English. He is not filing a return with CRA for the first time. He is otherwise up to date with his returns. He's not making any kind of election or special designation with the return. And again, direct deposit information, we cannot select yes because currently the CRA does not permit this information to be updated in the tax return filing itself. Okay, we will get to the box 107, not to worry. And where did we get the $500 amount? A good question. So if we look at the section here for box 107, we're taking it from here. So wage loss replacement plan benefits. So the box 107, we are going to enter on the T4A itself momentarily. And under here, we have his own contributions to the plan. Okay. Remember, in the field with an actual live client, we would ask for documentation such as a letter or statement from the employer listing the amounts that need to be claimed. That contributions that the taxpayer made to the plan. I don't want that. Let's dismiss that. All right. Calculate and continue here. Oh, FHSA. And the answer there is no. All right. We will calculate and continue. All right. So now we are at the tax information entry screen where we're going to enter all the various forms. So while we're thinking of it, let's enter the T4A. We can begin with that. So remember, just by typing in T4A, it'll take us to the T4A. And we can simply enter the box 107 down here. You can type in 107 or scroll through the menu, through the drop-down menu. Either way, it's fine. And we'll put in 2000. And that is all we need on this T4A. And the total premium paid to the wage loss replacement plan, that should be the 500, I believe. I will check that just to make sure we're not deducting that 500 twice, of course. Okay. Let's have a look here. All right, what do they want me to show you first? Ah, yes. So they wanted me to clarify. So because we're entering it on a T4A here, notice there's a field here to enter the 500 to the wage loss replacement plan here. Because we've entered that 500 there, this means that we can ignore the field for the 500 here. This is intended for cases where payment's been made on a T4. All right. Now let's move on to our next T slips. So we'll go through the T slips and then we'll do the moving expenses. So again, notice we can jump back and forth here by just clicking on tax documents. So T4, statement of remuneration paid. So this is going to be our ANA Packer slip. All right, so box 14 here is for 61,000. Box 22 for British Columbia is 11,441.20. Box 16 is 3421.25. Box 24 and 26 are both 61,000. And for box 18, it's 101260. Box 20, so RPP contributions. So remember, just a reminder to everybody, if you just hover your cursor over a box, it will give you this little hover text to let you know what that box is all about. So box 20 is 3,000. And the box 52 for the pension adjustment is 3,500. Okay. So meaning that for the 3,000 that Dave put into the retirement plan, the employer put in 500, which is not particularly generous. Okay, anything else we need to put in here? Box 45, the answer is 3. Remember, we can just type in a 3. And box 10 is going to be Manitoba. No, BC. He moved to BC and he's working in BC. All right, there we go. That's right. The T507, however, is issued in Manitoba. Right now, Gajinder asks, where do we put the $500 on the T4A? So remember with the T4A, and the software will force us to save before we move. So remember the 500 does not actually appear on the T4A itself. There's simply a space opened up underneath where we can essentially make a side note indicating that of the premiums from the plan, $500 were the employee's own contributions to the plan. Okay, now we have a T4E slip and the T5007, so let's enter those. So the T4E, so I'm going to enter this here. T4E, again, it's a relatively straightforward form, so it's not too complicated. We would put who it was issued by. So typically this is by Service Canada, or just leave it blank if we don't have that information. Box 14 is the total benefits paid, which is $12,830. This is the same as the box 15, which means that all of the benefits paid were regular benefits. So 12,830. And then box 22 for income tax withheld is 1505. So that's all we need to do to enter here. There are no unusual boxes on the T4E or anything like that. Notice that if there is a CERB benefit payment or anything like that, additional entries need to be made down here, but nothing like that is happening here. Okay, so we've entered our T4, we've entered our T4A, and we've entered our T4E. The last thing we're going to be doing is entering for T slips is to enter the T5007. Okay. All right, and box 10 is 67850. All right. For box 14, because this was issued in Manitoba, we do need to put in a 0 because Manitoba requires a figure to indicate what percentage of the amount in box 14 is social assistance. He moved from Manitoba, is why. So I'm just demonstrating this for you. But yeah, so this is why there's a box 14 here in the slips we have here. Because that's how we've demonstrated. Well, the slip itself would say that it was from Manitoba. He was collecting the benefits while in Manitoba before moving to British Columbia and starting work, is the logic here. and then we would answer no to indicate that there were no social assistance payments from the government of Manitoba. It was entirely workers' compensation benefits. Although you do make a point. So I'm just going to make a note for next year. All right. Yes, because normally the payer would say Government of Manitoba or something like that. Remember that workers' compensation benefits and social assistance are typically issued by provincial authorities, so normally it'll be pretty obvious if something is being issued by the Government of Manitoba, which is pretty much the only province which has this sort of flag attached to it. Other provinces send out, I believe, what's going on here is that other provinces send out separate T5007 slips for workers' compensation and for social assistance, but Manitoba combines them both on a single slip. All right. And there's no spouse involved, so we can just skim over that. Okay, so we now have entered the T-slips, and now everything from this point on is going to be moving expenses. So, as you might expect, we can just type in move, and this will give us the T1M, or we can type in T1M, but note that you have to put in the T1 dash to get the T1M. All right, let's see what this looks like. And I'm going to pull this over here for the moment to give a better view. All right, now you've got the address of the old residence and the new residence, but first we need to enter the distance for the purpose and distance requirements. So the distance between the previous home and the new workplace or school we have as 2,100 kilometers, and the distance between the new home and the new workplace or school is 10 kilometers, right? And the amount all right. And then we need to answer the purpose question. Did he move for the job or profession or to run business in a new place? Yes. And then we enter the net amount in the new workplace. So this would be the eligible income at new location, which we have is $57,425. So per our notes in the textbook, we begin with his $61,000, then we deduct the $3,000 for his registered pension plan and $575 for the enhanced CPP. All right, did he receive wage earner protection program payments in 2024? I don't. They weren't deducted from this. Let's leave that blank for the moment. I want to check that. I don't want to derail the demonstration. The date of the move. So the date of the move itself. So notice this software is very question driven and it kind of leads us through everything in a certain order. So the date of the move, April 4th, 24. And the date he started working is May 1st. And then we would enter the addresses involved. So the address of the previous home is 85 Public Road, and the city is Thompson, Manitoba, and the postal code there for Manitoba. We have one right here, R8N0M3. No country is involved. Then we put in the address of the new home, and this is going to be the same as the current address for Dave. Remember that somebody could move more than once in a year, so the address of the new home might not necessarily be the address they are currently at. In this case, however, it is true. So it's 367 3rd Street, Vancouver. And again, that is in British Columbia. Right. And now we need to put in the name of the new employer, business, or school, which is A&A Packers. And we've got their address here. A&A Packers. And this is in Vancouver. We need to put in their address here. So 1910, we'll make that Commercial Drive rather than Commercial Road. Commercial Drive. Notice that there is a character limit. The address will truncate, so I cannot add additional keystrokes past here. Cannot put in a comma or anything like that. Province or territory, British Columbia. And the postal code. All right. All right, and then we put in what's the amount on line 30? Of the T1M? For again, for line 30 of the T1M. Let's pull up a blank T1M. So these are unused moving expenses from 2023, right? So line 30 is unused moving expenses from 2023. So that would be the case if you had some unused moving expenses from a previous year. All right, and for the yes, and the name of there it is right up here. The name of the new employer goes up here. Good. So that's A&A Packers, 1910 Commercial Drive. But no, so that's good. But do notice there's a limit to how many characters you can put in the field. All right, otherwise. So occasionally we have to get quite creative with our abbreviations. Okay. All right, so transportation expenses. How many people in Dave's household moved with him? So just one person in the household, that is Dave. And did Dave use his own vehicle to drive? Yes. Did he use any other kind of transportation? No. Are we going to calculate using the simplified method? Yes, indeed we are. So how many kilometers did he travel with the vehicle? Oh, wait, he did. qualify as extra transportation, I think. So the number of kilometers is 2120. Yeah, the net income information, Valerie, is right at the end of the problem. It's called eligible income at the new location. Right, so 2120 for kilometers. Accommodation expenses, he did use U-Haul. So that'll go here under transportation and storage. So number of nights he stayed in accommodation during the move, so 2 nights. And he spent $130, which is pretty cheap. Number of days he spent, so 3 days for 9 meals. Total amount paid for meals, $105. I think we may want to remove this, but we'll have a look at that. And did he temporarily live somewhere else before or after the move? Yes. He had to live he was at Star Motel in Vancouver for 5 nights. So 5 nights temporary accommodations, paid $290. 5 days and 15 meals. And the total amount paid for meals is $178. Other expenses, so for the transportation and storage, that's going to be the U-Haul, so $250. And that is U-Haul trailer rental. And were there any other expenses? I don't see any other expenses here. All right. He did not sell a previous home or purchase a new home. He was not paid by his employer. And there is no amount from line 30 from 2023 because he didn't move in 2023. So notice that his refund here is impacted significantly by the moving expenses. Let's have a look at the T1M. So we can see the distance is calculated here. The date of the move is in here. The old home and new home have come through nicely. The new address for the new employer has come through nicely. Now notice that even though we put in an amount for meal expenses, because we're using the simplified method, the software automatically calculates that. So 3 days, 9 meals adds up to $207 in meal expenses during the drive, during the trip, and 15 meals adds up to $345 while staying in temporary accommodation. All right. Just going through to make sure there's nothing I've missed here. Okay, a lot of information about Manitoba considerations. I don't think we need to get bogged down in that. But if you are curious about Manitoba and social assistance, you can have a look at the Manitoba section of Chapter 9. All right. Now, in this case, Dave has previously signed up for online mail, so we do not need to provide his email address to the CRA again. So that should be okay there. All right. So the 615 in travel costs. So for the travel costs, we are using the simplified method. You can see the 615 is much less than the 1155.40 that he's claiming for the per kilometer rate. So if he wanted to claim the detailed method for travel costs and meal expenses, then we would use those. Let's close this here. Whoop. So close that. WebEx. Thank you. WebEx. So, because we are using the simplified method, it's not necessary to enter the 615. Right? If we put no, then the software would prompt us to enter those travel costs, and the total amount paid on meals would be claimed instead of simply using the simplified methods. Right? But bear in mind, when you use the detailed method to claim travel costs, you need to prorate the travel costs by the total number of kilometers driven in the year, and it generally just requires a lot more time and effort. So the detailed method is really mainly going to be of use when your moving expenses travel expenses are really, really high. So it shows you have a car accident or something like that, or need to do some vehicle repairs on the way. So in that case, you would be able to claim a higher amount than the simplified method would allow. Okay, all right, so let's have a look at the return then. The rest of it there, just make sure everything's showing up here. So back to the T1M. So the income in the new location is the 57,425 that we calculated here. If we close that. There was a wage loss. Wage earner protection program payments. Now, if we are entering those, is that the same as wage loss replacement plan? I wonder. So checking in the whoop. I want that. Get back here. Okay, so this is different from wage loss replacement plan. Okay, so this is payments that are considered to be uh, at the new location. All right. Okay, good. That clarifies that then. All right, so we don't need to worry about that. All right. Okay. Anything else to look at with the return? Let's notice here. So province of residence is here. So the wage loss replacement plan, the 1500 there. So that is from the T4A minus the 500. EI benefits showing up there. We have the workers' compensation benefits showing up here. And pension adjustment. All right, everything seems to be showing up here. So for a net income of 70,056.10, the taxable income of 69,377.60, and then in terms of tax credits, the big one is the disability amount for self, 98.72 coming in there, giving total non-refundable tax credits of 46.30.33. No other real tax credits going on. So the 57,425, I can explain that. So what you will notice is that amount is different from the taxable income up here. Your taxable income is 70,533. Okay, for gender. So to arrive at this figure for gender, let's go through. So the employment income is 61,000. The other employment income, this is from the this is from the T4A box 107. So it's 2,000 minus the $500 own contributions. So we only have 1,500 here. The EI benefits 12,830 from box 14. That should show up here. Yep. And then 678.50 is the from the T507 slip. And that should then be deducted down there. Yeah, it's deducted down there. Okay. All right. So what I have for total income is $76,008.50. Does that match up with yours? Okay. Okay, you're fine up until line 15000. Okay, let's look at the deductions here. So from the net in the net income stage, so from the $76,008.50, we deduct 3,000 for the RPP deduction, line 20700. The moving expenses I have as 2377.40. So if your moving expenses are different, that will give a different result here. The CPP enhanced contributions is 575. Okay, so the moving expenses are where it's different then. Okay, so let's have a look at the moving expenses then for you. So I can jump down to the T1M. because if your moving expenses are different, that's going to throw everything off. Okay, so for the actual expenses here, so for the U-Haul, we have the 250 up here. For the travel expenses, we're going to use the simplified method. So that's 2120 times the Manitoba rate per kilometer rate will give us 1155.40. Your moving expenses matches. Humaira, excellent. Okay, Gurjinder, how are yours looking? Okay. And Humaira, your taxable income is 69,377.60. Gurjinder, your line 3 is 2,090. Yep, that's right. Remember, that's just for the purpose requirement, so that's correct. $250 on line 4. Yeah. That's where we're different. So 337. So you've included accommodations and meals correctly, but the travel expenses are what's missing. So in order to calculate the travel expenses correctly, yeah, because 337, that is 130 plus 207. I think we found the problem. All right, so for the travel expenses, to calculate those correctly, you need to, where are we? Here we are. So you need to have vehicle expenses selected. So transportation expenses, did they use their vehicle? The answer here should be yes. Will these vehicle expenses be calculated using the simplified method? The answer should be yes. And then we entered the kilometers Dave traveled with the vehicle for the move, which is 2120. So if you do that, then we should have an amount here of 1155.40 on line 5 to give an amount on line 8 of 1492.40. Try running it again. If it's not showing up, let's see if we can figure it out. You don't have anything on line 5. Okay, so let's go back to the data entry here. So you've got a yes to this question. Dave uses the vehicle. No to the second question. There's no other kind of transportation. And yes to the simplified method. And then you've entered the kilometers, 2120 here. Okay, so if you've got all of that in and nothing's missing, then I would hit calculate and save, and then hit preview again, and then have a look at your new T1M. And you have one for people in the household. What else could it be? Yes, because if you've got all of that, then you should have an amount on line 5. Um, and you've got the previous home's address up here with Manitoba. With the previous home's address. Oh yes, if you haven't selected a province for it, then the software will not be able to determine what per kilometer rate to use. So if you don't enter the previous home or you leave the province blank, um, then yeah, that's probably it then. Well, that would make sense. Yeah, the province, remember the simplified vehicle expenses are based on the province of departure. So, okay, good. Well, I'm glad we figured that out. All right then. So then, with all of that, uh, then for final touches, we would wrap up the send worksheet, indicating that the information that we've downloaded matches what we find online with the CRA. Yes. There's no additional errors in the return. We can look at the credit summary. The moving expenses then, what I have is $2377.40, and this will give us a refund of $36.59.49. Okay. And if anyone hasn't worked it through at home, uh, optimization, it's right here at the top of review, but there isn't a lot to it. So click on review. This will give you the optimization elements. Why is he eligible for the disability amount? Because it's in the description of the problem, right? Right here. Get back here. Stop fooling around. All right. So it's in the description of the problem itself. So Dave suffered an injury in 2023 that left him permanently confined to a wheelchair, and he has a certified Form T2201 on file with the CRA. So that means he qualifies for the disability amount for himself. And because it's permanent, he will not need to reapply for the certificate, and it will be permanent and ongoing. Okay, Karina? All right. So, okay, so then we can look at the tax summary for him. So anyone who hasn't had a chance to work through it at home, just using our information here, we arrive at a refund of $36.59.49. And when it came time to e-file things, the only thing is he's signed up for online mail, wants to receive his notice of assessment electronically. So all we need to do here, indicate that he's going to receive it electronically. and he's already registered for online mail. He does not want to change his email address, and he doesn't want H&R Block to receive his information electronically. Then by signing the paper form, he declares all the information to be correct. Very good. All right, and so we're just going to save the changes there. All right, and yes, so Mohammed, you're asking about the 57,425. So just to refresh everyone's memory there, the 57,425. Let's just remind everyone what that is. So that is, of course, the earned income in the new location, 57,425. And how do we arrive at this number? So they do give you instructions on the form here. So basically, we take the income in the new location and deduct any amounts relating to the new work location that were entered on lines 207, etc. So in this case, 20700 is for the RPP, and 22215 is for the enhanced CPP contribution. So that was what we used to calculate this. So is 61,000 in employment income at the new location, minus the $3,000 RPP contribution, and then minus $575 for the enhanced CPP contribution. Okay? All right. So any other questions, guys, before I move on to the case studies? Anything else you want me to show you? All right. If you are finished, just click submit. This lets us know that you have finished the exercise. And again, just click the submit button here. There is no need. Again, we are not marking these. It is simply a complete, incomplete sort of thing. All right. But yes, once you're finished, click submit, and then you don't need to worry about it. All right, exercise 1-4, that is optional, so I'm going to leave that to the end of class, and we'll see how much time we have. What we do want to look at are case studies 1-1 and 1-2. It's 7:15. Yeah, so I'll get started on 1-1, and then we will have a break at 7:30 and then continue. Oh, sorry, exercises you don't need to submit. I mean, you can, it's not going to hurt anything, but it's the case studies that you submit.